Hello, I'm Bernard Hickey from Eurostoxx and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock. Starting now with news, the world's largest central banks took emergency concerted action overnight to try and stop the Europeans' financial crisis from rollicking out of control. The US Federal Reserve, the Bank of Japan, the Bank of England, the European Central Bank, the Bank of Canada and the Swiss National Bank all announced cuts in their swap lines for US dollars. Now this makes it cheaper for European banks in particular to get loans from central banks in US dollars, and they've got real issues getting hold of US dollars at the moment. That swap line rate was cut by 50 basis points to 0.5%, and those dollar swap lines were extended by 6 months to 2013. Also, the banks have set up temporary bilateral swap lines. These are the sorts of emergency measures the central banks took during the depths of the Lehman crisis and shows how much trouble the European financial system is in. Italy, its government had to make emergency cash tenders to Italian banks overnight. Now all this meant that stock markets surged. The Dow in late trade was up 380 points, or 3.3%. European stocks rose more than 4% overnight. Now this all pushed many investors back to riskier assets, including the New Zealand dollar. So the New Zealand dollar hit more than 78 US cents early this morning. It's currently trading at 77.9 US cents. Also big news for New Zealand overnight, the People's Bank of China has cut reserve requirements for its banks. That means an easing of monetary policy in China. Remember, China, our second largest trading partner and Australia's largest trading partner. It cut those reserve requirements to 21% from 21.5%, and that frees up about $50 billion worth of money for those Chinese banks to lend. This is the first easing in China since December 2008, remember, in the wake of Lehman Brothers, and follows a year of tightening in monetary policy by the Chinese. This is a big boost for New Zealand, which of course depends on what's happening in China for its growth. I'm Bernard Hickey. That was 90 at 9, brought to you in association with Bank of New Zealand.